Well, I think one way to think about the COVID-19 pandemic is that, like other disasters in history, particularly other pandemics, it's had the effect of accelerating some trends that already existed. This is very obvious as a broad point about technology. Everybody knows that what we expected to happen in 10 years has happened in 10 months, whether it's working from home, e-commerce, fintech broadly. But I think the adoption of Bitcoin, as well as a kind of growth of interest in other forms of cryptocurrency and decentralized finance, is one of the most important things that the pandemic has accelerated. Let me take you back in time to set the scene more broadly.
Please.
2008 was an extraordinary year. It was the year Satoshi published the paper that set out the case for Bitcoin, the white paper on which Bitcoin was based. And it was also the year I published The Ascent of Money. And they happened more or less simultaneously just before Lehman Brothers blew up and the financial crisis of that year intensified. So in the first edition of Ascent of Money, I didn't really have anything to say about cryptocurrency because it didn't exist when I was writing the book. But what I did talk about were the many flaws of the existing monetary and financial system, including the exclusion of significant proportions of humanity from the financial system and the vagaries of monetary regimes since the breakup of Bretton Woods, the dangers of fiat currency, the period of inflation in the 1970s when I was a kid, and then the period of near deflation that we saw at the beginning of the 21st century, in which the financial crisis really intensified. So I then came back to the book 10 years later in 2018, thinking I need to update this for a 10th anniversary edition. And one of the things I need to do is I need to have a chapter that addresses the phenomenon of cryptocurrency and particularly Bitcoin. So I added that. There are 2 new chapters in that new edition of the book. And of course, I was writing that after the 2017 Bitcoin bubble had burst, and there had been a very sharp sell-off in dollar terms. At that point in 2018, it was very fashionable to say, crypto is finished, Bitcoin is, quote, shitcoin. That was my old friend Nouriel Roubini's take. It was all going to zero, and it was the scam of the century. But I wasn't persuaded by that argument. And so in the updated Ascent of Money, I say that Bitcoin is not going away and crypto is not going away. They are part of a financial revolution that is actually just getting going. If you think about the 10 years after the financial crisis, much energy went into patching up the old system. That was really what regulators and legislators and bankers were preoccupied with. Not much attention was being paid to the beginning of the financial revolution, the ways in which Bitcoin and other cryptocurrencies were being used. And so it was only really after this 10-year period of patching things up that the financial revolution could begin in earnest. And I think we're seeing in 2020 that that financial revolution has already brought all kinds of really important innovations. And I think those innovations are here to stay. And I also think we'll see more in the coming years. So that in effect, the 10 years after 2018 will be much more financially revolutionary than the 10 years before, when all energies were going into patching up a system that had almost collapsed in 2008, 2009. Well, it's actually a really important analogy that I've been thinking about quite a bit this year. A lot of my energy this year went into thinking about the pandemic and trying to put it in historical perspective. I've written a new book that will come out early next year that does that, entitled Doom, The Politics of Catastrophe. And by comparison with what we've been through this year, the Black Death was a proper catastrophe, by comparison with which COVID-19 is a walk in the park. The Black Death swept across Eurasia and devastated the highly networked societies of Western Europe, reducing populations by between a third and a half. But what is not so widely known about the Black Death is that it also accelerated monetary and financial change in England and in Italy, because up until that point, the feudal economy that had emerged out of the ruins of the Roman Empire had been largely based on payments in kind. That is to say, you paid your lord in the form of labor, or you paid in the form of crops, of goods. And that was how essentially peasants paid their dues to their landlords. With the chronic labor shortages that followed the Black Death, that system broke down, and landlords found that they actually had to pay peasants to get them to work the land. And so you see the rapid growth of a cash-based economy, coin-based economy in Western Europe in the period after the 1340s. And this monetization of European economic life is extremely important because it's actually a much more efficient way of exchanging. You build markets that are much broader and much deeper once you have money and aren't paying in effect in the form of barter. So I hypothesized in that Bloomberg piece that we're undergoing something similar, where the disruption caused by the new pathogen SARS-CoV-2 and the disease COVID-19 are having a similar transformative effect in the realm of money. Not on the same scale, because, as I said, the Black Death was a vastly bigger disaster, but in a similar way, things that were happening suddenly begin to happen much faster. Bitcoin has become a much more legitimate form of asset, a digital asset, in the eyes of investors who previously were somewhat aloof. And one of the things I talk about in the piece is this adoption of Bitcoin by superstar investors like Stan Druckenmiller, or admissions by superstar investors like Ray Dalio that they don't really understand why Bitcoin is doing what it's doing. So I think the crisis of 2020 has accelerated financial history and propelled Bitcoin from that slightly shadowy place that it was in after the bubble burst in 2017, 2018, into this new kind of monetary respectability or financial respectability. And I think that's really important, because one of the arguments I made in the second edition of Ascent of Money was that at the very least, Bitcoin was going to prove itself as a kind of digital gold, something that you would put in your portfolio as a hedge against adverse events. And what made it attractive was it didn't behave exactly the same way as gold, or indeed many other assets. And so there was a kind of diversification argument that if, say, every millionaire on the planet held 0.2% of his or her portfolio in the form of Bitcoin, the price ought to be more like $15,000. This was written, remember, back in 2018 in a trough in Bitcoin valuation. Well, we passed 15,000. And that's, I think, mainly because of this process of adoption. And notice 0.2% is not a big weighting. In the book, in Ascent of Money, second edition, I suggested you could imagine a world in which 1% of every millionaire's portfolio was held in the form of Bitcoin. And then you were looking at a really much higher price than we see today. So I think that's the story, which I think is not widely understood by those people who are still talking about shitcoin and predicting a kind of crypto apocalypse. They haven't seen that what we're really living through is an adoption process where more and more individuals and institutions say, okay, this is kind of digital gold and we want to have a piece of that. It's a crazy volatile world.